All right, so there is this one rule that would have saved me a lot of money last year, and this one rule is going to make me a lot of money this year. So let me show you what this one rule is. I'm gonna go over my trade breakdown from yesterday and the exact rules I'm going to enforce into the new year. So happy new year. If you're new here, welcome. I'm documenting my journey and hopefully this trade breakdown and all the YouTube videos I'm going to make is going to help everybody along their way. So let's get right into it. So I only took 2 trades on gold on yesterday's trades. On NQ, I didn't really take any trades. Plus, I was at work, so I didn't really see any good opportunities. So because the market opened and the 10 a.m. candle just straight up shoot down, just straight out went for that liquidity. Once there's like a massive liquidity that the market takes out, I'm not really that interested in going after it, even though there's always more opportunity taking this type of trade. So you can put it like this, and the price didn't really went above it. The price kind of touched it and start going down the other way. So that's why I said there wasn't much of opportunity the way I traded in. Maybe like one or two opportunity here. If you go down to 1 minute, yeah, there was actually a couple opportunity. So this one didn't really come down to this area. So the way I trade, I usually trade, I let the price goes above a certain liquidity and then come down. Look, watch that strategy video if you don't know what I'm talking about. And there wasn't much here. I always look to the left side to see if there's any significant liquidity that I can pay attention. On this area, I marked it, but I didn't take the trade because it only touched it. It didn't go above it. Yes, close above it, close below it before I can take it. This one you could have taken for a base hit. This one you could have taken for a base hit. Only like maybe one or two good opportunities. If you were awake before the market opened, probably this opportunity because we were in an uptrend. So when we are on an uptrend, you can mark the previous hourly for a nice liquidity sweep. Once the liquidity sweep closes above it, you just wait for a retracement because you wait for the market open. So market opened. Here we inverse this gap when we close above this original liquidity area. So I'm always waiting for the price to show me where it's going. I'm not predicting, I'm just reacting to the market. So you have an inverse gap here, closed above the POI, and now we just get in here. And I would target like a quick 1-to-1. So 183. Yeah, so, or you can target this liquidity in this case. Very easy, 1-to-1. Or you can target this liquidity, which is somewhere around here. Yeah. So that's how I trade. Very simple. Just see if the price comes down below a certain level, grab liquidity, and then I just get in. It's also called CCT, candle continuation theory. So let's go over the trade that I actually took and the rules that I'm going to not break this year. And I'm going to hold myself accountable by publicly sharing all these trades into the community. If you like it, you can join the community. The link is in the description. If you're a returning viewer, consider liking, commenting, and subscribing, sharing it. And if you have a question or any feedback, just leave it in the comment section. So on the gold, I was watching gold. The price kept tumbling. I kept marking my levels around here. Didn't really see anything. I marked this level, didn't really hit it. And then I marked this level. This one got hit. This one got hit. And when this level got hit, this was a really good trade. So this is what I'm talking about. Like sometimes the price tests your patience. So I waited for the price to go above my level and then close below it. Once it closed below it, around here, I missed the trade. I didn't take it, and then I let it close one more. I wanted this entire candle to be flipped over because we're on an uptrend. When you're on an uptrend, you want the price to show you that hey, we're gonna go down, and it's very high probability when it's below this recent liquidity, because price below this means it's going to continue to go below it, and you really have to trust it. So the rule I'm talking about is pretty much stop loss. So I got in here, I put my stop loss right here. So I had two targets. This was my first target for a quick 1-to-1 take profit, and then this was my second target for a full liquidity. It's usually harder to target the full liquidity, but it's easier to just go for a quick 1-to-1. The quick 1-to-1 would be around here for me. But look how long it would have taken you. So I got in trade at 12:07. The trade would have hit the profit at almost an hour later. But this will like it'll just test your patience. So this one rule is very simple, but it's very simple when I say it, but it's very difficult to actually follow it. And that one rule is pretty much leaving your stop loss be or put it at a most recent swing. So what I used to do when the prices start going into my direction, for example, on a 1-to-1, it shouldn't be applied, but I still apply this rule, even though I'm taking 1-to-1. The only time I'm applying my stop loss rule to the most recent swings is when I'm targeting in the full liquidity. If I'm not targeting the full liquidity, which is more of a dangerous move, it's more of a harder move to hit, you have to leave your stop loss be. And on this trade, when the price got so close, went over 50% off my target, and then start coming closing back up. At this point, I was already like trailing my, so I moved my stop loss from here to here. I was like, if the price go above this level, I'm not interested in. And then once we went over 50% to my target profit, then I moved it to this most recent swing low, like right here. I was like, no way is the price gonna come and take this high and then go all the way down. The price went all the way here and then inversed this gap and kept going up. I was like, And I had a feeling, I was like, for a second, I was like, I should just keep it at this most recent swing low. But I kept the same rigid rule and the bad habit of moving it to the most recent swing because because markets are dynamic. Markets don't move like the same way every day. You can't have like a rigid rules and just follow it down to the T. I feel like that's the mistake that I made. That's the mistake that most people make. They either have an extremely rigid rules or they are too discretionary with their trades. They either make too many discretionary trades. Too many discretionary rules. And they're like, oh, I'll do this if the price do this, and I'll do this if I do this. I take profit here and there. Maybe I do this, maybe I'll do that. Or the other side of the swing is also not good. If you have extreme rigid rule, oh, I will not move my stop loss. I'm either gonna hit my stop loss or I'm gonna hit my take profit. That's also not good. You kind of have to see what the price is giving you and react it based off that. In this case, the best case of scenario, instead of leaving it up here, I should have just moved it a bit above this swing and then just let it be. That's as simple as that. It's easy to say it, it's easy to think about it, but when you're on the chart, when you see the prices going up and down, it's actually harder to execute on it. Because in your mind, you're thinking, oh, what if the price do that? What if the price do that? And another thing that helps out with this rule is to go to your settings and then change your position and brackets, and instead of the money sign to tick sign. So you only see ticks going up and down instead of seeing the actual dollar amount going up and down. Because that way it's very mechanical. It's a game. It's not about money. And one of those rules is pretty much, I don't care about a trade being a winning trade, or I don't care about the trade being a certain profit and loss. You will lose. I was losing a lot of trades because I was trading my profit and loss. Then I was losing a lot of trade because I was trading my profit and loss, like the money on the screen. As soon as I start trading my system, and a winning trade became a trade that I followed my rules 100%. Even if this trade would have worked out, it would have been a lost trade in my book, because I didn't follow my rule. Instead of leaving it here at the most recent swing low, I was too aggressive and put it at like the very most recent swing, instead of giving it a little bit of room, or just leaving it alone on a 1-to-1, which what everybody should do, including if you're a new trade. You just have to trust it. Yeah. So from here to here, if the price would have come down here and it would have hit my take profit, it would have been a win in terms of money, but it would have been a loss in terms of process, in terms of psychology, and in terms of building bad habits. So that's what I meant. So yeah, I moved it right around here, and of course, market punishes you. I got tagged out, and the price eventually hit my take profit. Not only hit my take profit, it went full liquidity. You know exactly what I'm talking about if that happened to you. Like, price tags you because you moved your stop loss and it goes to your take profit. It is extremely agonizing. And you know exactly what I'm talking about if it happened to you. And you tell yourself you're not gonna do it again, but then you'll do it again. And that's the biggest thing in trading, is just to always constantly remind yourself of these simple rules and not let the emotion of the market get into your head. I've gotten very good at it recently with implementing these rules. Hopefully it helps some of y'all that want to be in the same state. So yeah, just one model. And one of the other thing is just hitting base hit, base run. I can't show you an example of how many times I have been up thousands of dollars. Thousands of dollars I've been up. But I let the price to come to my break even, just because I was targeting, I was too stubborn on letting the price go to so and so called liquidity. I was hell bent on getting either the liquidity or break even, or sometimes even letting it go to loss. If I would have like accumulate all those base hits, just 1-to-1, just 1-to-2, because you're risking $50 to make $50, for example, technically you made 100% gain on the amount that you risk. So hopefully that way of thinking helps you out. And when I start thinking that way, I start winning more trades. Yep. So that's that. And what else I was gonna mention? Oh, max trades per session. I would say about like 1 or 2. So 1 win, maybe another trade in that afternoon if the setup is good. So 2 trade, 2 lost. I'm done for the day. And being okay with walking away with a red day. I was never okay with walking away with the red day. I had to make it either break even or I had to make it a green day. So 2 trade max. If I lose one, win one, I'll walk away. That's kind of what happened on yesterday's trade. The second trade I win, and I ended the day with green. So I started the year with green being in a winning slash break even stage. I'll go over it in a second. And that's it. Those are the rules. So let's go back to the hourly. So the second trade was around here. Since we're still going down, I marked this level right here. Call it liquidity. And I go down to 1 minute. Boom, boom, reset it. So this was a very clean trade. So you see I marked my hourly level. And we see the price is just coming up. And right around here, the price closed above it, closed below it, and then close below it again. We flip this candle range. Once we close below it, you don't really need to wait for extra confirmation. I did. I just wait for this candle to close. You don't have to. And I got in right here. My stop loss right around here. And my take profit was about 40. Yeah, I took like 40 or 42 ticks like this. See, in this case, I could have targeted here. I could have targeted here, but in this case, the price didn't hit any of this. It didn't hit this or this. But since I had a 1-to-1, I just slightly above 1-to-1, the price just hit my take profit and I was done. And that win recuperated for this loss and helped me to be green for the day. So yeah, that's it. And if you can see, the price kind of does the same thing over and over again. The price close below it a wick, an hourly, come to it, close above it, and then close below it, and it goes to the next liquidity. And then I was marking this level and this level. So for example, on this trade, I was marking here. I also marked here. So when the price come close above this level, previous wick, I knew we had enough juice for at least a 1-to-1. Got in, and I was done. 2 trades, came to the break-even stage, and I was done. That's pretty much it on that one. Pretty simple. So yeah, once you get good at this, the overconfident and the greed will make you lose at the beginning first until you get good at trying to manage that part of the trade. And before I go, if you haven't, you can join the community. I'm probably gonna go live tomorrow if I can to go over some backtesting, some psychology stuff. We have over 700 members here. And for the next week trading plan, it's pretty much every day is a trading plan because of if you go to Forex Factory, pretty much we are stacked with a bunch of news. So the volatility and the price action is going to be really good. That's pretty much it. And one more thing before I go, I've been getting us some DMs on my Instagram and my ex and some of them in the school community. I didn't expect this much interest already, and I haven't done this before. So I've decided to make something structured based for those of you who are serious or need it, like for something like a small number of traders who want to get funded and need more of a one-on-one direct guidance or exact process to follow. And before I fully reveal it to everybody, there's a link down in the description, and it helps me understand what you would need from me in the one-on-one program, not just for everybody in the community. And this will be you and me and chart on the call and going over everything with you. I can't work with everybody, but if you're interested, fill out the link below and I will reach out to you. That's pretty much it. I'll see you guys in the next one. Peace.